Hey everyone, welcome back to Corporate Decoder, the place where we expose the true meaning behind corporate filings. And today we've got a real doozy. Anvi Global Holdings Inc. is back with their quarterly report. And let's just say the numbers paint an interesting picture, so buckle up because we're about to dive into what all this financial jargon really means for the company and its shareholders. Now, before we get into the nitty-gritty, if you enjoy getting straight, unvarnished insights from company filings, make sure you hit that subscribe button so you don't miss our future deep dives also. We've got a growing community on Discord where we break down these reports even further, so check out the link in the description below to join the conversation. This filing is for the period ending May 31, 2025, and it's a look at how Anvi Global Holdings Inc. has been doing quarter over quarter, essentially providing a snapshot of their financial health and operations. Let's start by looking at their balance sheet. This is like a financial snapshot of what the company owns and what it owes at a specific point in time. As of May 31, 2025, Anvi Global Holdings had about 642 in cash. That's a pretty small amount if you think about it, especially when you look at their liabilities. Their total current liabilities, which are the debts they need to pay back within a year, stand at a hefty 2027,671. This is a significant amount compared to their cash on hand, and a big chunk of those liabilities are accounts payable to related parties totaling 684,000. This hints at a lot of transactions with entities connected to the company's management or owners. Adding to that, they owe 61,345 to an officer, which means money is being borrowed from or owed to someone high up in the company's leadership. Now here's where it gets really interesting. Their total stockholders deficit is 221,221,142. This isn't a typo. They actually have a negative amount in stockholders equity, meaning the company owes more than it owns on paper. Moving on to the statement of operations, which shows how much money the company made or lost over a period of time. For the 3 months ended May 31, 2025, Anvi Global Holdings reported a net loss of 448. This is similar to the 5,007 loss they had in the same period last year. Their general and administrative expenses were 4,824.8 this quarter. That's a decrease from last year, but it still represents a significant chunk of spending for a company that isn't generating much revenue here. And to nobody's surprise, the loss per share is essentially zero. So you're not really making or losing much on a per share basis because the company is so deeply in the red. Now let's look at the cash flow statement, which tracks the actual cash moving in and out of the company. For the 3 months ended May 31, 2025, the company used 520.25. The company used 532.01 in cash for its operations. This is less than the 9856 used in the previous year, but it still shows cash is being spent, not generated. On the flip side, they received 9,800 in advances from an officer during this period, and last year they received 16,500. This shows the company is relying on its officers for cash infusions to keep things running. This resulted in a net increase in cash of 4,599, bringing their total cash to just 642 at the end of the period, which is pretty much unchanged from the beginning of the quarter when they had 1,543. Digging into the notes, Anvi Global Holdings was incorporated in Nevada in August 2012, and it sounds like the original business plan involving crepes was abandoned when the company's control changed hands in May 2014. This note about going concern is really important. It directly states that the company has had no revenue and a growing deficit, raising substantial doubt about its ability to continue operating. The company acknowledges that its ability to continue operating. The company acknowledges that its ability to continue as a going concern is uncertain and depends on its ability to get more money and successfully implement its plans. This sentence is critical. They don't know if they can get more money by selling more stock. This is a really precarious position to be in. They mentioned prepaid expenses of $93.15 for OTC Markets annual fee. This is a small operational cost, but it's one of the few concrete expenses mentioned. This is where things get really interesting. They have a service agreement with Strategic IT Group Inc., a company owned by their CEO, Rama Mohan Arbusa. This agreement for $12,000 a month covers various services like office space, IT, and business consulting. They owe $9,000 to this related company. This is a massive amount, and it's not budging between reporting periods. Then there's another related party, Anvi Global Inc., also owned by the CEO, to which they owe $684,000. And again, CEO Rama Mohan Arbusa has personally advanced funds totaling over $601,461.30 over These related party transactions and advances from the CEO suggest that the company's operations are heavily reliant on its leadership acting as a lender and service provider, which is a common sign in very early stage or struggling companies. In the management's discussion section, the company reiterates that they were incorporated to sell crepes, but that business was abandoned when the principles changed in 2014. They now aim to be a diversified global holdings company, focusing on mining, infrastructure, health services, and aerospace engineering, investing in emerging markets. This is a crucial point. They haven't actually acquired or invested in anything yet. Despite their grand plans, they are essentially a shell company at this moment, with no operational business to speak of. The discussion on results of operations mirrors what we saw in financial statements, a continuing net loss with general and administrative expenses staying relatively consistent, though slightly lower than the prior year. Under liquidity and capital resources, they mention the CEO advances, which we've already covered, and they state they have no lines of credit or bank financing. They openly admit that additional equity or debt issuances will result in dilution and that financing may not be available on acceptable terms. This is a very candid admission. They don't have enough business to generate cash flow. This section regarding controls and procedures is particularly telling. They state their disclosure controls and procedures were ineffective due to a material weakness in internal control over financial reporting. They clearly state that their internal controls are not effective. The management blames this on inadequate segregation of duties and insufficient written policies and procedures for accounting and financial reporting. This is common for very small companies, but it highlights a lack of robust financial oversight. They plan to fix these issues, but they explicitly state that these remediation efforts are largely dependent on securing additional financing. If they don't get more money, their efforts to improve controls could be significantly impacted. Finally, the exhibits include certifications confirming the accuracy of the report by the CEO and CFO, along with various filings for inline XBRL data, which is a standard for many public companies. So what's the story here with Anvi Global Holdings Inc? Well, it's a company with very ambitious global expansion plans, but as of this report, they haven't actually made any moves towards acquiring or investing in businesses. The financial picture is bleak, characterized by a consistent net loss and a substantial stockholders deficit. The company is heavily reliant on its CEO and related parties for funding and services. This reliance, combined with the acknowledged material weaknesses in internal controls and the uncertainty surrounding future financing, paints a picture of a company that's very much in its nascent or perhaps struggling stages. The company recognizes its precarious position with the going concern note and the clear statements about needing financing and lacking operational cash flow. The stated intention to diversify into mining infrastructure and other sectors is a common strategy for companies looking for a turnaround or a new direction, but the lack of any actual acquisitions or investments as of May 2025 means these plans are purely aspirational at this point. For investors, this report suggests high risk. The company has a long way to go to establish any revenue generating operations, and the financial structure is heavily dependent on insiders. The lack of segregation of duties and clear accounting procedures also raises a red flag about transparency and accuracy, although the management is acknowledging these issues and planning to address them contingent on funding. In conclusion, Anvi Global Holdings Inc. is a company with a future vision but a very weak present financial reality. The journey from a holding company without any holdings to a profitable, diversified global player is a monumental task, and the current financials do not inspire much confidence. Any investment in this company would be highly speculative and dependent on successful fundraising and execution of their very broad strategic goals. Alright, that's our breakdown of Anvi Global Holdings Inc.'s latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.